yeah, hopefully I had a bit of a cold. I think I've been traveling far too much and working far too hard, and my body is telling me something. But um, in any case, I do think I should be getting better now. I also had a bit of a stomach virus issues, but now everything is fine, so that is great. And thank you all, for some kind words that I've seen. By the way, a quick housekeeping point: this live will be about half an hour, and most importantly, I have been seeing a lot of bots commenting in my channel, and basically they say, how can I invest in crypto? And then this, oh, if you trade with this person, they've been making $10,000 per week and stuff like that. These are all bots. This is all fake. I usually try to reply in the trend line saying, look, these are just bots. Most people on YouTube are aware of this, so basically, just for you to be aware, yes, if you see like these thread lines of people answering to each other on these investment ideas or gurus or whatever, or if you eventually see a copy of my profile saying that contact me on WhatsApp thing, I will never ask you any of that. Okay, so I'll never ask you to contact me. I mean, you don't even at this stage, you cannot even send me money if you try. So that's the point. No, thank you, Raz. Very nice words. No, I do feel better. It's just I've been working a bit too much and and then of course I'm also a family man, so I also need to allocate time and dedication to that front. So I think my body was telling me to slow down a little bit, but now things should stabilize. But thank you for the kind words. But in any case, guys, let's kick it off. Let's maybe start with a couple of things. So you may have seen that the stock market this week had a bit of mixed signals, in the sense that Dow Jones was a bit negative on the week, but then the tech stocks were up on the week, and that tech has been leading the market. So that would tell me that we should be trying to put in a bottom here. If you've been following my channel and my content, I've been saying that what is important is also that the S&P doesn't break 4,200 to 4,250, so that level seems to be holding up. But unlike everybody else that was talking about commercial real estate and the banks and the liquidity crisis, said no, look at the bond market. That will tell you everything that you need to know. And we don't necessarily need the bond market, like TLT is the easiest way to gauge this. You don't need it to go back to the hundreds. You just need it to stop falling 10, 20, 30%, 1, 2, 3, 4% per week, because that will move the entirety of the market. Okay? And the reason for it is actually quite simple. What did I say? I started the channel back in June. What did I been saying? The Fed is trying to hold rates higher as high as possible, as long as possible. Now, I did say that eventually they will need to cut rates because of how the system is built. It cannot tolerate higher interest rates for too long in the future. Now, it can withstand most what people think, around 1 year, 2 years, it is possible. What I'm saying is you should think about like this. So you have 2021, then 2022 you start, so it can withstand until 2024, even late 2024. But the issue is that they would need cooperation from the government side in order to actually manage to keep this higher. Why? It's very simple. They want to do QT. QT means the Fed has accumulated a lot of bonds through the years. They want to sell them. But the problem is, because we have trade deficits in the US, we also need to borrow that money. And because we have huge budget deficits, we also need to borrow that money. So the Fed and the Treasury compete for buyers on their treasuries at the same time. That is a problem. if the treasury side would say, look guys, we borrowed too much money, now we need to pay off some stuff, and they would have some surplus on that front, then they can repay the debt. And basically what the Fed is bringing into supply, the treasury is taking out. But at the moment you have three forces at the same time. You have the Fed selling bonds, you have treasury issuing bonds because they need to finance their deficits, and you have the other countries selling US treasuries because they're trying to get out of US dollars after what the US did to a certain country that has been in conflict with another country. I need to be a bit careful, otherwise I get something called shadow ban. By the way, guys, thank you all for joining in. If you could, when you come in, if you could drop that like and subscribe in case you are not subscribed, that would be very helpful for the channel. That's the only thing that I ask. So thank you very much for your support. We're approaching 600 subs in under 4 months, so that is great. But going back to the market itself, I did say we are trading within this big sideways range. Typically, we get slammed into 4,350, 4,550 in the S&P, so that $200 range. But occasionally we touch the extreme ups when we go above 4,600, and we touch the extreme bottoms when we go beneath 4,300, which is exactly what happened once again. And again, as soon as we start going down, the YouTube videos start popping up. Global Depression 2.0. This is going to be worse than the Great Depression of 1929. 2008 was a picnic. Blah blah blah. The same old crap that everybody should be expecting, and that typically is a bottom signal. You see, these people benefit from our human nature of basically paying much more attention to negative stuff than to positive stuff. Now, not to be confused, I've mentioned this multiple times, I do think this decade will not be particularly good for the US, at least compared to international. So when I say that, what does that mean? If the US goes up by 50%, but international goes up by 200%, the US didn't fare very well against international. That's my point. Okay, so it doesn't mean it's going to collapse 80, 90% and things like that, like Harry Dent and the others say. And this actually puts me into another discussion, which links it to the finance experts. And you need to be very careful with these people. Two of them are on the bond side, and those are called Harry Dent and Steven Van Meter. Now, one, Harry Dent, has been predicting the Great Depression since 2009, and he's been advising people to short stocks since 2009. So that's just for you to have an idea how brilliant this guy is. And then the other one is Steven Van Meter, who calls himself the bond king, and he's basically been telling you that the bonds are bottoming since TLT was 170. And he's been advising people to buy bonds ever since it was 170. And basically that guy, I don't know how he is, but he sells his audience this portfolio shield, which apparently doesn't work because he gets slammed consistently. But other than that, nowadays, he almost posts content about a garbage stock in which he's paid $6,500 to do it. So the question you should ask yourself is, why are these two brilliant investors needing to all these little tricks to basically get your money? So that's the question you should ask. And number two, Harry Dent used to have so much negative comments in his YouTube channel because he would get, oh, you've been saying this since 2009, 2012, 2014, depending on when the person commenting saw him for the first time. And it's so sad. And of course, he had to block them because then people realize the truth about them. Now, what is the problem with this finance YouTube thing, which is portrayed to be the freedom of financial press and all of that crap? Is that the interviewers know perfectly well the track record of these people is absolutely miserable. But they never challenge them on that. Like, you can have Harry Dent going to multiple channels on YouTube, right? The real finance that bring real education to you, right? And they never ask the question, oh, by the way, but here's a clip of you in 2009 saying the exact same thing. So basically, if you've been shorting the stock market if you actually have been following your recommendations over the years, you should be down about 90% since 2009, when everybody else is up hundreds of percent, 600% or so. Can you explain why we should listen to you now? That would be a fair question and real interviews. The problem is they need him because he talks in such a passionate way that it attracts views for those guys' channels. So those people interviewing, the defenders of real finance, are the same, are basically in bed with all of this situation because they need the views to succeed. Other guy who's been predicting the end of the world for now almost a decade is Robert Kiyosaki, which is a very famous guy. And basically there was a post, it was a very nice post, I tried to find it, but I couldn't, where basically was his predictions of we are in the crash, now this is the crash, and basically all of them in the long-term chart of the S&P marked bottoms. All of them, no exception. I saw a tweet of him one time saying, stocks are crashing. And then I went to see, and the NASDAQ was down 0.1%. This is the point. Why? Because during the day, it was down 2%, but it recovered to negative 0.1%. But this is the point. These people are obsessed with crashes, but what they want to do is to derive content to their platforms, because that's how they actually make their money, is by you buying their books, their funds, their programs, their Patreons, by buying their books, listening to their interviews. This is how they make their money. It's not in the market. They make no money in the market. And the final point that I would like to address this will be Peter Schiff. Now, I made a prediction, but in June, when gold, or June or July, gold was above $2,000. And I said gold will be down to $1,850 by the end of July. I actually meant end of August. I made a mistake. I said end of July. It wasn't also end of August, so I was wrong on that. It was end of September. It's now beneath $1,850. But in any case, the question that you should be making is, here you have two people. One of them says gold is going to $1,850, although wrong by 30 days. It went to $1,850. The other guy is saying buy gold at 2,000 something because it's going to go to 3,000 imminently. The question you should ask is, who actually got the right direction, and who charges you money for it? Now that is the key, because then he tries to bring you into Schiff Gold, so you buy his gold, or to buy his funds, where he gets a management fee. See, he doesn't care if his funds go up or down because he makes money on managing it. And what I'm trying to say here is that once again, these people and again, this is another guy with a terrible track record. He basically had one good call in 20 years, which was the 2008, and after that, it's been nothing but crap. He has been predicting Bitcoin to zero since it was $100. So, and basically convinced people to sell their Bitcoin back in 2012, 2013, to buy gold. Congratulations, they could have created generational wealth, and they are now stuck in the same jobs doing the things they hate, thanks to listening to a guy like Peter Schiff. And my point is, also don't listen to me. I mean, make your own research. It's so easy. Like, see what works for the majority of people over time. It's very clear. Don't follow these lunatics into distraction because they make money. Here is the key. You lose money. They may also make investments and lose money, but they get the YouTube ad revenue, they get the sponsorships, they get the Patreons, they get super chats, they get interviews, they get books, they manage funds, they sell you gold, you name it. They make all that money back. They couldn't care less. If they lose $500,000 here, they will get $500,000 someplace else. But if you lose $500,000, well, for many people, that is complete destruction. So I would hope, indeed, that you guys manage to be careful with that and to understand that these people make their money like that. Quick one on gold. I do think gold is actually losing its position in terms of being an inflation hedge. You see, the reason why people think gold is an inflation hedge is because during the 70s and 80s, gold went from $35 to $800. As inflation was going up, it was pretty much the only thing, and real estate, that went up. So people say, oh, inflation hedge. You see, I have a different theory on that. My opinion is Nixon takes the US and the rest of the world out of the gold standard, correct? So what happens? People that live in that time still remember gold as money. So many of them, that everybody had theories about how the world was going to end when they've done that. So a lot of people bought gold fearing that the end, that the currencies will all collapse and you'll have hyperinflation all around the world. And people still thought about that. This is the key. People thought about gold as money. I don't think people nowadays think about gold as money. Okay? So there is a big difference. Culturally speaking, in terms of adoption in the people's minds, it's very, very different. Now, here is the key. Because you are in inflationary periods and you just had a huge boom in the 50s and 60s, what happens? Stocks, bonds start to sell off in the 70s and in the 80s. But because people were so afraid, they were buying gold, so gold is pretty much one of the few things going up. So people see, okay, everything is going down, but that thing is going up. What do? They FOMO. It's the old school FOMO. They buy into whatever is going up. And by buying it, it goes up. And by buying it, it goes up. And by buying it, it goes up until it plateaus. And it did plateau when it hit about $800. And then it sold off into $200 by the year 2000. And what I see when I see gold nowadays, what do I see? I see a behavior similar to the other commodities. What is it? 2-3 years does very well. Then it goes sideways. 2-3 years goes extremely well. Then 1 to 2 years have a bear market. In the case of gold, was a bit longer, was between 2011 and 2015. So it goes down quite a bit, between 50 and 80%, depending on the commodity. And then the rest of the, let's say, 25 years just goes sideways. That's it. That is the commodity cycle. The commodity cycle is about 30 years. You have 2 years of excitement on the upside. You have 2 years of excitement on the downside. And then you have long sideways movement, quite big between each other. And it's quite a boring market. So, and now we are in the highest inflation probably ever seen, but at least the second highest inflation that we've seen in the last 100 years. Now the question becomes, record money printing as well. So we have quantitative easing, money printing like never seen before, inflation higher than you would need to go back to the 70s and 80s to see higher numbers, and yet gold is pretty much actually is down versus 2011. Gold is nominally down versus 2011. So inflation adjusted, my God, I think you need gold to go to about 2,500 to have a new real all-time high versus 2011. So what is it now? Is it an industrial metal? Is it a certain type of commodity? Or is it still money? Or is it an inflation hedge? I don't think it's an inflation hedge anymore. I don't think it's viewed as money. I think it's viewed more and more as a commodity, as an industrial metal. But you still see some resistance, let's say, in keeping gold as money. But in my opinion, as people that remember gold as money a long time ago, start to die, right, because they're getting older, I do think that this connection between gold and money will become lower and lower. And I know that there's always these conversations about suppressing the price of gold with derivatives, blah, blah, blah. I get it. There's always spoofing, there's always manipulation. I get it. But it's not to the level that people think. It's a bit like the story with AMC. It's like, do you have manipulation with AMC? Yes. Do you have fails to deliver? Yes. But the stock would not be $5 trillion market cap without it. You see what I mean? So, but the thing is, I know that the big banks suppress it, and I know that, for example, JP Morgan has been fined all around. But even if I'm talking about even the physical one, like if you go for the physical one and you check the premiums on it, etc. Look, in the past, ideally, what I'm trying to say here is that you would have seen gold going up like tenfold. Talking about 20,000 gold, 15,000 gold. If you're thinking about a proxy of the 80s, but a bit adjusted downwards because, times are different and gold has actually had a nice run over the years to some extent. Look, it's actually quite simple. You look at gold now versus gold in the 80s. If you adjust it for inflation, and I'm not even talking about the real inflation, I'm talking the government numbers in terms of inflation, gold is in the same place. I mean, but nowadays it's actually, not even inflation adjusted. It's down versus 2011. Now contrast that, with stocks. Contrast that with, with crypto is a complete beatdown. So what I'm trying to say here is that I'm not, by the way, I'm not anti-gold. I actually own gold. We actually have jewelry in the house. So basically, we actually value it, and just not to confuse people. And I get it. Like an ounce of gold 100 years ago would buy you a nice suit. An ounce of gold now it buys you a nice suit. I get it. I'm not defending fiat. I don't like fiat. I think it's complete crap. Yeah, I get it, I get all of that, right? But the point is, what I'm trying to say is that there may be a crisis of identity on the on actually future place of gold and silver. Now, may it be that in the ranking of money, it will become like the horse for transport. So basically, when the first cars came out and people said, oh, by the way, in 30 years' time, there are going to be no horses, it was all full of cars, people would laugh at you. And people would say, oh yeah, but for 1,000 of years we've used horses. Horses are reliable. Horses are this. Horses are that. And the reality is that we actually don't have horses anymore. I mean, that's the point. Sometimes you have certain transformational things that happen that maybe change the industry completely. I mean, to be seen. I actually hope gold as a spot in the future. I do feel it's very unclear right now if it's still an inflation hedge or if it's just a commodity or an industrial metal. I mean, difficult to say. No, I get it, Ryan. I get it. It's to preserve wealth and not to make wealth. I get it. But in that context, I would prefer something like real estate because it actually proves to be very successful against surviving inflation, and you derive cash flows from it. So, and I do think a lot of rich people has been buying farmland, has been buying real estate exactly because of that. And I think culturally speaking, we are losing the connection between gold and money. That's just my point. Maybe I'm completely wrong. Look, man, I'm just giving you my opinion, but maybe I'm completely wrong. And hello, Manuel. Thank you for coming here. Let's get maybe to the last section that I would like to discuss. Now, I've been talking about the crypto cycle for quite a bit. Manuel, I will reply to your question in a little bit. So what I'm trying to say here, so with the crypto cycle, this now should be actually very clear for everyone. I've advocated this for a long time, which is you have 1 year, which is the bear market. You have the second year, which is the recovery year. Typically, you have big runoffs in short periods of time. Then you have sell-offs and sideways movements. Why? Because people remember what happened in the bear market, so they start to sell off. And as they start to sell off, basically the rallies are never extended for longer periods of time because people are still very suspicious of the space, of is this a real rally or is going to sell off like all the others in the bear market, blah, blah, blah. And then what starts to happen, and then of course, then you have the year of the halving, you have the beginnings of the bull market. Typically, Bitcoin, Ethereum run first, and then the altcoins run last. This time around, we may have seen some front running on the altcoins, but because people already know what's going to happen. And then you have the big explosion, which is the last year where everything goes up. Pictures of monkeys, dog coins, scams, ICOs, anything goes up. Doesn't really matter. And then when people say the bear market will never come, this time is different, this time is only going to go up, Bitcoin is going to go up 10x from here, Bitcoin will replace the dollar tomorrow, things like that, when Jim Cramer on CNBC gets very excited, that is the time to sell. That is the end of the bull market. About the BitBoy drama, no, I know more or less what happened to him. Look, on his personal life, I really don't like to talk about people's personal life. I mean, I'm not a judge. I don't like to judge people on the. I'm not even very religious, but it's just a basis of principle. I know that he was accused, and to me, what is more relevant is on the crypto side, not so much the other stuff, where he was accused of pump and dumping coins in to his audience and to his following. Unfortunately, this is something that you see with a lot of YouTubers. I'm not saying that he actually did it, but apparently there's quite some evidence that he did, plus his team as well. And plus coming up with new coins and new coins and new coins to his audience. Now, what you need to understand is this. You have crypto, okay? The funniest part is that the people that made the most money in crypto are the ones that just bought the coins, hold them, and that's it. I'm talking about good projects, right? I'm not talking about a scam that goes straight to zero. I'm talking about good projects. Those are the ones that made the most money. Thousands of businesses have been created around crypto, okay? On YouTube, courses, trading, platforms, lending, exchanges, you name it. A lot of things have been created around crypto. None of them have made as much money as just holding the coin. But what happens is when they're in the bull market, they talk about coins and all of them go up and they think they're geniuses. They're not. They're just in the bull market and typically on the craziness phase, on the high, on the time where NFTs are being sold for $1 million, pictures of monkeys are being sold for $1 million, etc. And what happens is they start these big businesses. They start hiring people, researchers, analysts, technical traders, these people, those people, blah, blah, blah. And then the bear market comes. When the bear market comes, the interest on crypto decreases. So nobody's watching YouTube. And nobody's buying these courses. Nobody is joining these private groups. Nobody really cares about this. And then during the recovery year is also bad because basically it's a lot of sideways, dead movement, like looking at paint dry. And people get bored and they lose interest, right? But the problem is because these are businesses, they have overhead costs. They need to pay salaries. They need to pay for IT. Sometimes they need to pay for offices. They need to pay for facilities. They need to pay for utilities. They need to pay for all of this. But their coins, so their portfolio, is also going down. So if things get dire enough, they get to a point where they need to start pump and dumping coins. They need to start coming up with their own coins. They need to start with a lot of strange things, let's call it that way, to make up for the losses they are having on their portfolio and on their business. There was another guy, Alexander Lorenzo. He thought he was the guru of crypto, blah blah blah, and now he made a video a while ago saying he had to fire everybody, blah blah blah. So this is what ends up happening, unfortunately. Now I'm not saying this is what happened to him, but this is what I've seen being alleged, which impacts me the most. So what I try to do is, instead of spending all my time looking at this kind of stuff, is, what do I say? Understand crypto, understand the purposes of it, understand what is a good project, understand how to find a good project, understand that YouTubers are here to make money from you, and most of them actually make money from you rather than their investments on crypto. And if you follow those kind of things, you'll be well. I actually have a playlist of how to find good crypto ecosystems and how can you thrive. And then I do everything for free because I don't want your money. This is me. I'm here to broadcast, hopefully, my journey in what I hope to be generational wealth. It doesn't matter who I am. So if you actually see my video, you'll see why I wear the mask and things like that. I don't care. And if I do very well, I don't need to charge anybody's money. That's the key. See, you should ask yourselves why such billionaire guys and millionaires guys need to charge so much money to people. It's because they make more money from you than they make in their crypto investments. So, and to understand basic things like there's going to be a narrative in the next crypto cycle. What is going to be the narrative? I don't know. We need to wait and see. But there's going to be a big narrative. Just like the previous cycle, it was layer ones, dog coins, NFTs. What's going to be the next three next time? I'm thinking maybe decentralized exchanges. Maybe interchain operability. Maybe AI memes. Who knows? I'm looking for it. And at this point, I don't think it's knowledgeable enough or it's clear enough to make definite decisions. So I'm waiting and seeing. And then I have what I believe to be my core coins that I hope that will bring me into the promised land. And I have a little bit of lottery tickets in which I don't expect much from it. But if they go very well, hey, who am I to complain? XRP and GRT. GRT I don't know so well, so I won't comment much on that. XRP. I made actually, about a couple of days ago, I did make some videos on XRP and XLM. In case people don't know, they have the same founder. And they actually try to do the similar things. One for banks and institutions, the other one more focused on companies. Then they have different situations around it. So I'll try to give you a very short summary on XRP. By the way, guys, thank you all for being here. And drop that like and subscribe if you haven't done so. That is the only thing that I ask from my dear audience. You know, what a grifter that I am. But let's go. So XRP. GRT, I can make a video afterwards because I don't follow it so closely, so I don't want to say anything. You know, sometimes the smartest thing you can say is that you don't know. So instead of just, rambling on and inventing stuff. XRP is not a scam. It has a loyal community. The project actually works. It's not a security. So all of these things are good. Now, during the court case, it was proven that Ripple was dumping XRP consistently over months and months and months and months and even years. Are they still doing it? Some people say no, some people say yes. I mean, difficult to say. It's in its third cycle curse, so I don't like it that much because of it. I was extremely happy that they beat the SEC. So in case you don't know, by the way, I'm in favor of crypto. I'm not in favor of this tribalism, this coin versus that coin. No, I think in matters like versus the SEC, I think we should all be in the same boat, in my opinion. But I mean, people know. So my summary is this. I think XRP is a good project. I think it's grossly over-marketed and badly marketed. These partnerships, these rolling out of all the banks are using XRP, blah, 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 all of this kind of stuff. So it's grossly over-marketed. I think it will do well in the next cycle. I don't think it will create generational wealth anymore. That is my opinion. And by the way, there's always something that people kind of confuse, which is, oh yeah, but payment networks, payment systems, payment networks, payment systems, like XRP and XLM, right? I say, look, if you combine the valuation of Visa, MasterCard, American Express, blah, 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 these all together are worth $1 trillion. Then you have gold, $10 trillion. Store of value, 10 times more valuable than payment systems. Which one is more useful? Payment system. Like for your day-to-day life, it's payment system. correct? What is actually more valuable? Store of value. So this is the problem. Sometimes people fall for what I call the utility meme. They think, oh, this is very useful. This is very useful. Useful and valuable may not be the same thing. I mean, it's very useful that water comes into a bottle. But it's extremely cheap, right? So, I mean, so people sometimes confuse that concept and usually be to the downside. So I would say, look, I think it will do well. I think the project XRP will manage well the next cycle. I don't think it's gonna go up 500-fold. But again, look, man, I'm not giving you financial advice, just my honest opinion. This is what I think. Now imagine it goes up 500-fold. You can come here again and completely destroy me. Now, finally, I would like to discuss a little bit about something that I was expecting, but I'm seeing it quite clearly now. With stocks like Finger and stocks like DWalk and stocks like MBOT and stocks like that, which is going something like this. Did you lose a lot of money on AMC? Get all your money back by going into this next garbage stock. Now, this is to entice you to do something called revenge trading. That means when you do a decision that goes poorly and then you try to revenge that poor decision by trading into other stuff to compensate for the losses and come back ahead. Now, this is one of the most destructive behaviors by people in general, and this is one of the most destructive behaviors, not just for your account, but also for your mental health. And the problem here is people that do this are trying to basically keep deriving ad revenue out of you. So I'm talking about the meme stock stuff and all of that. So basically, they've drank all your blood during the AMC debacle, and now they are going to do it in other stocks as well. Why? Because once again, very simple, they make their money out of you and not out of their own investments. So never forget about it. This is how they make their money, and they cannot do anything in the markets. And these are the type of people who only do well in the bull markets, particularly on the top, where everything goes up. Tattooed Chef, what was it? Very Good Food Company, AMC, like everything goes up. And then once reality sets in, you can see really who's swimming naked. By the way, guys, we are already a bit above the 30-minute mark, but that is fine. If you guys have any other questions for me, I will try to answer them. In any case, drop that like and subscribe as I mentioned, and thank you very much for being here today. I really appreciate it, and I hope you enjoy the content. If you have some suggestions for me, in terms of what's some things that you would like to see, I'll try to cover them. I will try to dig up a little bit more on the artificial intelligence side, because I do think it's going to be the most impactful trend probably for the next 30 years, but it's very difficult for anybody to really address what that impact's going to be. But I can tell you this, I've seen something that really excited me and scared me at the same time. So in case you guys don't know, we have this big, call it leap forwards in terms of years based on the advancement of technology. So basically, the biggest advancement we've ever had in history was when we basically moved forward 50 years in one single year of technological development. So that was the record. AI, it's been the best estimates that I've seen, is supposed to bring us 1,000 years into the future within 10 years. That is an average of 100 years per year, which is double the record of all mankind. So think about what that means. Will we stop having doctors, lawyers, surgeons, dentists? Will it all be AI plus robotics? Will we start printing organs like it's nothing and having them being set in with AI plus robotics as well. I mean, who knows? Will people look at us? Will our children look at us and think, oh my God, did you guys used to have doctors like real people? But why? I mean, with this system, it's much safer, blah, blah, blah. I mean, maybe that's going to be the future. I mean, who knows? This is something I'd like to explore a bit further in my next videos. I always have a little segment on Sundays in which I look a bit more to the general economic and the macro trends. I've done a video on this lately, but I'll try to keep informed on that and to tell you as much as possible about it and also my opinion. Once again, guys, this is not financial advice. I'm here just for education and for entertainment purposes. And I hope that my journey will be very good for the future, and that I hope that for you guys as well. So once again, thank you very much, guys, for all your support, and I'll catch you in the next videos. So stay tuned, and thank you once again. In case you haven't done it, drop that like and subscribe.